Hello, and we have some important news for you. Well, I thought that there would be no challenges to Genesis liquidating their GBTC shares and their G Ethereum shares and other stuff. But there are two entities with their own motives for not letting Grayscale Genesis liquidate. And this might just cancel out that big dump that we were talking about. Now, I'm not a lawyer, don't have a law degree, so I'm not really sure how this is going to play out in court. But if you've actually been following all of this, this could actually result in some pretty interesting legal battles that could actually delay this Bitcoin dump until it doesn't matter anymore. So let's actually take a look at the actual dispute. So basically, Grayscale and DCG, which is I think the parent of Genesis, does not want them to liquidate $1.6 billion in trust shares. So DCG is contending the Genesis motives for selling the assets lacked merit, and of course Grayscale objected. I think realistically Grayscale doesn't want them to sell because they don't want to sell $1.6 more billion worth of assets from Grayscale, thus forcing them to liquidate Bitcoin because they've been actually bleeding a lot of business to BlackRock and Fidelity already, and they don't want another hit to their business. I think DCG also doesn't want them to sell because they don't want the price of Bitcoin to dump. And both of these entities don't want the price of Bitcoin to dump because their business is based around Bitcoin. But GBTC is basically taking a legal approach to this. So GBTC shares, ETHE shares, and ETCG shares, collectively known as the trust shares, constituting restricted securities, cannot be sold, assigned, or otherwise disposed of without Grayscale's prior written consent. And Genesis did not give Grayscale prior written consent. They didn't get the consent from Grayscale, which may be provided or withheld in its sole discretion. So basically, they continued that complying with Genesis requests might undermine its ability to ensure compliance with federal securities laws and regulations. So they're also afraid that if they liquidated in compliance with Genesis, they actually might be in trouble for breaking rules. So they need to get all their ducks in a line. And they want the court to deny the portion of the motion seeking to nullify its consent rights. Because if anyone can nullify the consent rights, that might be a problem for Grayscale in the future. And the authorized participant requirements, the firm further emphasized the need to undertake its standard process to ensure compliance with applicable laws. I think this is more of a delay than a no, but because it actually took no position on whether Genesis should be allowed to sell the assets and has no intent or to delay or obstruct the sale. So they're saying they can actually sell if they want to, but they need to go through the entire process, and they can't be done through immediate liquidation because Grayscale is trying to protect its own rights. I think they are just trying to delay the Bitcoin sales further, basically, by using this tactic. Because like I said, they've been bleeding a lot to BlackRock, Fidelity, and the other BTC ETFs, and they don't really want another 1.6 billion or 1.4 billion in Bitcoin actually sold. DCG has actually argued that Genesis motives for selling the assets have absolutely no merit whatsoever. Because they say the debtors amended plan and when the distributions to creditors might actually occur, there appears to be no immediate need for the relief requested by debtors. So no one really needs to immediately sell to the debtors. That's what their lawyers wrote. So they don't need to liquidate immediately. And they're saying that there's other motives for Genesis to sell. So the asset management firm advised delaying any asset sale until the debtor's amended plan hearing concludes. So they want the process to actually conclude first to get all the ducks in a row as well. However, if the court favors the motion, DCG urges the appointment of a specialized broker for these assets and recommends consultation before any sales occur. So they're trying to kind of delay the sales as well. And of course, they objected to the approval of Genesis bankruptcy plan because it overcompensated creditors at its detriment. So obviously, DCG is the, I think, kind of owner of Genesis, and they obviously don't want to overcompensate the creditors because that would actually cost them more money. So they're trying to delay the process, obviously, to get the most benefit for them. They obviously don't want a giant sell-off. So DCG and Grayscale actually oppose the motion. What does this mean? That means there's going to be somewhat of a legal battle, and that means delays. That's right. I eventually thought this was going to be approved within a few weeks. We were going to have a sell-off back to the upper 30,000s, but now that we've actually hit 50K, we might not go below 40K anyways. And if this is going to be delayed several weeks, we might not have this until we get to 60, 70K. And then that sell-off might only be down to from 70K down to 60K or from 60K down to 50K. And so yeah, it doesn't look like it's going to happen anytime soon. So waiting for that retrace doesn't really make all that much sense right now. Did not really foresee this coming in court. I thought Genesis was going to be able to sell very, very quickly. Now, the judge still might grant Genesis the petition very quickly, but now that there are challenges, it might be more difficult. Not saying it can't happen, but it might actually be more difficult. I could be wrong about all of this, and the court could just look at these objections and be like, yeah, they're not really relevant. But, you're going to have to ask a lawyer about that. And just since these objections have come into light, I think the court will actually have to take longer to allow this sale to actually continue. So that drop might not be happening anytime soon. That being said, we do have the CPI tomorrow, and I do think the CPI is going to come in higher than what's expected. I believe the consensus is like something like 2.9%, and I do believe it's going to be higher than 2.9 because gas prices have actually been going up because of the situation in the Red Sea. Although much of that rise has been in February, and the January gas prices were generally pretty low. When I got gas in January, it was roughly like $2.50. So like it might actually be fairly low in January, but February's CPI coming out in March, right before the FOMC meeting, might actually be fairly high. So I actually think like tomorrow's CPI numbers will cause the market to dip a little bit, but not very much. Maybe go down a couple hundred points, but that's about it, and we will recover very, very quickly. And maybe without Genesis selling, we could go up to 60K. Or 55K before we really start dumping. There is a bit of profit taking right now. I really wouldn't be surprised if we went down to like 48K or so because, it's pumped up. People are in the profit. They want to take some profit. But even if we go down to 48K without this big sale, we shouldn't go down that much further. And we could just bump up from 40K and attack 50 again. We still have not cleared the 50K mark. That's still like kind of like the big marker. Right now it's only 50,100. If we can get above like 50,500, that would actually show me that we can actually clearly like break that marker. And I think 50K is a really big resistance because that's more of a psychological resistance than anything else. Also, we haven't been to 50K since like December of 2021. That's like more than 2 years ago. That's before all the fallouts and all the scams actually happened. So I think like there's going to be kind of a level before that. Now, they've actually said that this is 50K without retail buyers coming in. I don't really know if I agree with that analysis because it's mainly been ETFs, but some of those ETFs are retail buyers. Now, some of them have definitely been institutions, but there's a decent amount of big retail actually buying in there. I think like some of the retail, like some of the more, I guess, risk adverse retail, they want like something that is more regulated. So they're actually buying Bitcoin ETFs off BlackRock and Fidelity, and that's forcing BlackRock and Fidelity to buy more Bitcoin. So indirectly, some of the retail's already in the market, but directly it does not look like anything's in the market because it's just been BlackRock and Fidelity buying. Remember, they have AUMs of $3 billion. Not all of that's going to be big and institutional. There's still some retail buyers that are buying ETFs too. There are a couple of people in my chat that are actually buying ETFs because they like the FDIC stuff. I personally am not buying the ETF shares. I'm just buying Bitcoin by itself because I want more just Bitcoin for myself. But there is some institutional involvement, right? There is some retail involvement right now. The spot buyers aren't quite in yet, but like the OTC buyers via BlackRock and Fidelity, I believe they're already here. So I actually don't think that's quite correct. I don't think that's quite correct in saying that there's no retail involved right now because I definitely believe there is actually retail involved right now. But when the spot retail comes in, I think the price will go much higher than it is right now. Like if we can blow up to 50,000 without the spot retail, I think when spot retail goes in, we can easily go above 100,000. Obviously, there's going to be hiccups on the way, but besides that, I don't really see like any real stumps from getting to the all-time high and going higher than the all-time high. I still think it's going to happen after the halving, although there is a chance that we will get there before the halving. I think like the wanting to take profits from a lot of people will actually like counterbalance it until we actually get the halving. I mean, I still expect this like Genesis to sale to come in somewhere along the way, and I do expect a sell off, but it may not be within the next couple of weeks. And that might be all that matters because by the time it happens, we might already have a lot of retail pressure buying up, and then a sell of $1.4 billion may not actually matter all that much. So right now, DCAing obviously still the best strategy as always. Not very wise to look for a big drop. Yes, I know Crypto Savvy and a couple of other people are like super bearish, and that Well Watcher guy on Twitter is still calling for a down to like 15K, but that's obviously not going to happen at this point. And there's really no event that I could see that would actually even make it happen. Even if they went after CZ really hard and it caused Binance some troubles, it really wouldn't dump it that much right now. So right now, yeah, you definitely want to have like some money in the game. Hopefully you've been DCAing like I've been telling you to for like the last year or so. But if you haven't, like right now is not a bad time to start buying in some because I think you can be missing a lot of the game. You could wait for a retrace to 48, I think, but you're not really buying that much more at 48 that you wouldn't be buying now. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.